Okay, there's a ton going on in the show. Danny doesn't understand the word "stop talking" before the show because Danny was giving away vital, good show content right before the show, so we had to hush Danny up. Zach, I think, is having not a conundrum, not an issue, but I switched the screen that they see right now is the ADHD of my mind, and it kind of threw Zach off. He's like, I need a chart, just give me something simple, and I've got six different things up, which is how my mind works. And then Alex won't stop, and which led to Alex having a bunch of that's what she says, and I just don't know where to begin now. Now my brain is frozen, so I'm just gonna let people know that I'm going to give you something, stock nerds and market lovers, in the next 3 minutes and 25 seconds. That's going to absolutely make or save you money. Okay, so just hang with me here as we go through the Alex Epiphany. We're going to start with the Alex Epiphany that rental cars are expensive. Okay, I want to tell you something. I got some. Alex is going to a place called Prey, Montana. Okay. So I don't know where that is. He says it's north of Yellowstone. I think Yogi and Boo Boo are there. And so, how much is Alex, how much was the rental? You couldn't get a rental car from hers because they didn't have any. Is that correct?
Yeah, and the ones they had available were like $400 a day, and it was for a van.
Like a van
No
or a
thanks.
minivan? Like a cargo van or a minivan?
A soccer mom van.
Dude, soccer mom vans rock, dude.
Don't you know?
That's where you find one, soccer moms. Two, dude, I drive the Chrysler Pacifica S for sexy.
S.
I wanted something I could.
Sexy.
I couldn't drive that because of the trails and stuff in Montana, and we wanted to make sure we had
you can stick to your original thought process. You're not going to insult.
Yeah, exactly.
You're not going to hurt my feelings. I know what I drive, and I like what I drive. I'm not about looks. I'm about utilitarian value. Is what I'm after. So, but Alex then went with a startup. Who'd you go with, Alex?
There's a company called Turo, and you can download the app on your phone. It's pretty streamlined, easy to use, and
so it's
Airbnb.
So Hunter goes, it's Airbnb for your car, which is the best way to put it. You as a civilian can rent out your car to another civilian, and what do you pay somebody to rent? What are you renting? One, vehicle type, and what are you paying?
It's a GMC Sierra pickup truck,
right?
And it ran, I think it was like $260 a day.
Ooh. Well,
it's pretty expensive.
I rented a soccer mom van at a bowl. I went back to Pennsylvania for a couple of weeks, and as you notice, I'm back in the studio. Which this is where I want to do the show. I hate doing the show from the road.
It's a challenge.
It's a challenge like none other, and I didn't enjoy it. It was stressful. This is home, and I would rather always do the show here than not do it on the road.
Just don't go anywhere anymore.
Yeah, that's a tough one. That's the answer. But I like doing it here.
Yeah, that costed more than the flight.
Yeah. So my rental car, so we rented the soccer mom van, and there's a trick you can do. It's not a trick, but you can rent through. First off, flying through Baltimore, Washington. Look, we have listeners, and there's stock nerds and market lovers specifically in the capital region, in the Baltimore and the BWI area. So I want to be really careful how I tread here. Your rental car facility just blows. Like every time it gets me. I have flown through Baltimore because it's less expensive than Philadelphia, and I live in the boondocks of Pennsylvania, very, very rural, like that. Like those cows are my neighbors, and I can tell you that it is tough to get in. Like it's a whole day affair, after you have to drive a couple hours to get back home. I have been stuck the last 4 trips back to Pennsylvania. I haven't gotten out of the rental car facility in under 2 hours, and I'm not making it up. It has been everything in the brother. First, I'm not making this up. The computer system crashed right as we get up to the counter one time. Like it's all this time.
Remy probably unpulled the plug out.
Oh my gosh! And this time, now we keep adding kids. Right. So at first it's just Reagan, then it's Remy and Reagan. Now it's Remy, Reagan, and Nora, who, by the way, is affectionately nicknamed the Queen because she just raises her hand and points to where she wants to be taken. And that girl is filling out a comment card like you wouldn't believe every day where she's going somewhere. She's yelping your service. every moment of the day. She's letting you know and posting it online just what she thinks of how you're taking care of her. So she is demanding. Love her, but she is demanding. So anyway, this rental car facility, Danny, it hurts. So not hurts. Avis. So we rent through budget. Oh, the trick with Amazon. I got to tell people. So if you rent your car through Amazon, there's a budget. Like they do it through budget. You get a percentage back that you can then go spend on it. And it's competitive. The pricing is extremely competitive with any of the airlines. Like you know how you book a flight and then like rent your car, and then it's competitive. And so we just rent through Amazon. Little consumer tip there, Danny, to start the show. Unplanned little consumer tip. So Hertz, for people who had reservations, like the bus drops you off, they had no cars. They're telling people come back in 2 to 3 hours. And they had no car. Like you walk. So we thought we had this thing lit. Like we're going to go to budget. We've got budget, like the budget where you're a bigwig and you walk straight out to the lot. Yeah. So we show up, and you know what the counter says at budget? We got no workers. Go down to Avis. Wow. So you got to go to Avis. Like no problem. We're probably fast break. That's what they call the program, fast break. We'll probably just walk right out to the car there with 3 kids, pumping all the gear that comes with 3 kids and everything. No. They don't have enough workers to go man the booth out there. So you're now going to wait in a 2-hour-long line for a vehicle. There's nobody to work. I don't know where they've disappeared to. There is nobody to work. And I'm not making commentary on like they don't want to work or nothing like that. Like there's just no human being. Like you, and I mean this. The people at the counter are super nice. Like I'm grateful that they're there. Because if they weren't there, there would be no car to go out to. And I'm not being facetious one bit. Like, by the time you get up to the line, you're just grateful that they're showing up. Because the people in front of me were abusing the people behind the counter, which is not right. And so, 2 hours, right? And then kids get hangry. Like, they don't get hungry and angry. Like, they get hangry, right? Like, hungry and angry together. So, Spirit's demoralized, right? After waiting 2 hours, we finally get to the car. The kids want to make it like, now we got to figure out where to go eat. I'm not, look, I won't, Danny knows me. I'm a germphobe. Hunter and Alex, I am a germphobe, right? Zach.
Yes.
I am a big germphobe.
Yeah.
And I couldn't help, but I couldn't take it anymore. I don't want to go through the decision-making process of a preteen, a 4-year-old who's happy just to go lucky to be anywhere, and then Nora, who's letting me know exactly how she's feeling about the situation. Pulled into the grossest Golden Corral I've ever been to, and I don't. I don't do buffets. Like I purposely won't go to a buffet because I don't.
Got it.
I just don't want to be rude here, but man, there's a lot of breathing.
You don't want
sneezing,
sloppy seconds, yeah.
And there's a lot of things going on here. And Tanya,
there are not enough Lysol wipes in the world to make that place good for you.
No, there's not. Jeff Foxworthy can't do enough commercials to make me ever want to go to a Golden Corral. And so, but I see it, and I'm like, there's something for everyone there. We're done. We pull into the Golden Corral. It took everything I had to sell the kids on this place. Look at how great this is. The people behind the counters weren't happy to be there, but there was a diabetes convention just hovering around all the things, and I'm like, this is not a good example. And the food was all gristly, and I'm a little and I'm not a very particular person. Like I like MREs, you know. Like I'm grateful to have food, and at this point in time in my life, I'm like, sell it for one kid. Who can I sell one kid on? Remy, the pizza looks amazing here. Let's get some. And so he was all happy, right? And I'm like, well, if I'm happy and Remy's happy, maybe the other kids will come around too. Nora starts coming around. It was Tanya was so shocked that we pulled into this Golden Corral. I can't begin to tell you. And Remy left with a bag of cotton candy. Cotton candy is the dessert at Golden Corral, I found out. like a circus bag full of cotton candy. If you're looking to make your kids happy at home, folks, you take them to the Golden Corral and you're paying $40 for cotton candy. But and some slices of pizza. So gross. I can't begin to tell you how just. And then Remy's like, I've got to pee. Now I've got to go to the bathroom at the Golden Corral.
Oh no.
And let me tell you, the alternative with Remy, because he's so awesome, the alternative with Remy for me, when he says I got to go pee, and we're out in public, and the level of bathrooms you want to use out in public, folks, is so you know the hierarchy of where to go. Costco. Where there is a Costco, there is a clean bathroom. You can change your child. They have if your kid's potty trained, the stalls are going to be clean. If your kid's in diapers, they've got one of those pull down things, right? If you've got,
I gotta interrupt you. What's that gas station stop in Texas?
It's Buc-ee's.
Is it Buc-ee's?
It's Buc-ee's, right?
Yeah, but there's a
Buc-ee's here.
Yeah, they're not as popular.
No.
Buc-ee's are not as popular.
No, they have. I went to this gas
one?
station stop, and this is when I was having my irritable bowel disease. Okay, so I had to stop, and I'm not going to share too much information, but there was 20 stalls. Hold on. There was 20 stalls that were the most immaculate.
That's Buc-ee's.
Like it was. I felt like I was going to the bathroom at the Vatican.
Buc-ee's aren't.
Yep,
Yeah, well,
yep,
yeah. If the Pope, by the way, the Pope's having a poop problem too. By the way, just want to throw that out there. So, but it costs. Seriously, there's a Catholic poop problem at the top. So, side note. Not that this whole show hasn't been a side note.
We're just spiraling down.
No. So if you've got a young child,
pull it up, Tim. Pull it up.
About to. So if you've got to, before I pull it up, if you've got to drop trowel as the adult, and you want to go to Costco because they've also got the side seat, like a motorcycle car, you can then set your kid on the seat, strap them in while you do your business. Danny, you've never seen this. I can see by the look on your face. The side seat is a game changer because I spend my whole time telling Remy, don't touch anything. Remy, don't get close to the urinal. Remy, step back.
This way you can lock them in and you don't have to worry.
That's exactly what you do when you have to go. So Costco's are the way. Everything else is just silver medal or worse, right? You want to go to Costco. I didn't know that. Oh, yes, my friend. So the alternative with Remy, when he tells me he just has to pee, we go at the door. And by the door, I mean the door of the car. So we go with the parking lot, right? We'll go to an abandoned parking lot. And Remy has learned how to pee when you open the door to give him a little bat wing coverage, right. And then he just pees right in the parking lot. That is the alternative. But now you can't go into the parking lot of the Golden Corral because there's a bus that just pulled in. And so they're all standing around your car. So now we got to go into the bathroom at the Golden Corral. Not cleanly. Gross. They could have just cleaned it and it came out dirty. Like they cleaned it and it was still dirty. Anyway, so we returned the car to Baltimore. Here's something to check. One more consumer tidbit that I've rented thousands of cars. Every week I travel with IBD, right? I've never had this happen to me. So the rental was supposed to be for like $1,400-1,500, right? Total, we paid in advance. We get a bill for like $3,500.
Ooh. What?
Right? Yeah, right?
Oh my God.
And
how many days?
It was 14. And so I'm like, Tanya, what happened?
Damn.
And she's like, I don't know. And I've never seen. And the guy looks at me, literally goes, "I started yesterday. Don't yell at me." And I'm like, dude, I'm not going to yell at you.
Just fix it.
I just want to know what you can do to make this not $3,500. And he goes, I can't do anything. It's what it rung up as. Like I'm just hitting buttons. And I'm like, oh. And by the way, they didn't have a toddler seat. So this is how messed up Avis is right now. So we had to. They like just drive to the Walmart 3 miles from here. Go buy a toddler seat, and when you come back, we'll deduct it off your bill.
Wow.
that looked, yeah.
They're making you go get the car seat yourself.
It sounds like Avis is going on.
They're all having this issue. And so, they're all having this issue. So anyway, after we convinced the guy who just started yesterday that we're not making this up, that they told us to get a car seat, we go to the little booth outside, and I meet the nicest gentleman, and I say, look, we're supposed to return this car seat and you're going to take some money off. But more importantly, my bill is twice as what it was supposed to be. And he goes, let me look at this. They charged you mileage. And I'm like, what? He goes, yeah, they charged you 21 cents a mile. Like it's not unlimited. Like I guess Amazon had 2,100 total miles that you're allowed to drive. They checked the car out with only 100 miles on it. So whatever the mileage is, you
didn't make any Amazon deliveries, therefore you got charged by the mile.
No. So he goes, I'll get it all squared away. He just dealt with a dude who had a car for a similar amount of time, who was charged 75 cents a mile when he wasn't supposed to be, and had $25,000 taken out of his checking account.
Oh,
Where did he drive?
Well, and I just looked at the man behind the counter. I'm like, how did you know that this was the problem? And he told me that. He goes, because I just dealt with this yesterday. And I'm like, I am so glad you are here. I thought for sure that we were going to have to fight, and you can't call anybody because there's nobody answering the phones. He goes, oh, I know, it's bad.
Yep.
And I wouldn't have known what to do unless this guy had the problem 24 hours before you. And I'm like, sweet baby Jesus is shining down upon me. Thank you. And that, my friends, is your consumer tips of the day.
Yeah, use Turo.
Yeah. So look, folks, stock nerds and walking lovers, you know I love you. Okay, look, here's the thing: we have to get you into the tent. We have to. You've listened to the whole story because you didn't know it was going to take a twist and turn to my son pees in a parking lot. But now that I've got you, I'm going to show you something that I track when the market tends to want to shift, and then we'll get into the rest of the meat of the show here. Okay, so here's the NASDAQ. Okay, the NASDAQ futures. NASDAQ broke trend yesterday, and you can see on the daily chart still looks great, Tim. I'm not arguing with you. What I'm telling you is that yields went down on Thursday. We're taping the show 11:26 Friday morning Central Time. Okay, yields went down yesterday, and the NASDAQ went down. Normally that doesn't happen. Like the normal parlance is yields down, NASDAQ techie type stocks. You say that fast, David. Oh. And when that happens, it catches my attention, right? Because that's not normal. That's not normal for this market. That's usually not normal in general. And so that's the indice I'm going to hawk. So I usually talk to people in terms of S&Ps. But I'm like, wait a minute, this NASDAQ is signaling to me, hey, I'm not behaving in a manner that is apropos. I'm going to, so for me as a fellow stocker like yourselves at home, I'm now going to pay attention to that indice. Which
I'm being a bad child. I need to be strapped up in the sidecar in the
if you're going to drop
toilet.
Charlotte to Costco, I need to be strapped in for this. And so but it kind of made sense to me a little bit where growth stocks have suffered this week. This has not been the best week overall for growth stocks. The growth stocks have had tremendous moves overall lately. This week they started to break down a little bit.
Big move, little consolidation or pull.
Yeah. And so let me pay attention to this NASDAQ. And so when the market shifts like that, I then take it down to an hourly chart. So I think 30 minutes for me is too short. And this is my preference. You might be at home going, I'm watching it on the 1 minute, Tim. I'm drinking Red Bull. I'm drinking Mountain Dew Rise. I'm drinking coffee all at the same time. Great. Me, I need a little sensibility. So 30 minutes is too short. 4 hour, which I love a good 4 hour chart because it's like a heads up into what's going to happen on the daily. A little too long in this thing. So I like hourly. Okay, so I'll just take it down to an hourly chart. And it's the same things I'm watching at home with you, stock nerds, market lovers. So I'm looking, my friends. I'm looking for things like what's the 5 doing in relation to the 8? Well, the 5's crossing through the 8. Okay. I'm looking for the 21, the mean, the pink line here. What's the 21 doing to the 8? Oh, it's breaking down, or broke a little bit there. And then what's it doing to the 50? So I'm looking to track all these levels of breakdown. Okay, so, and when I say breakdown, I just mean momentum shifts. Where's the momentum? To get a moving average to cross to the downside takes a tremendous amount of effort. But let me just put that in, let me just parse that out a little bit more, okay? How do stocks go down? So it takes a tremendous amount of energy for a stock to go up, right? The auctioneer has the auctioneer has XYZ stock at $100, and he raises a hand. He goes 101. Danny raises a hand, 101. Then the auctioneer says, I got another lot here. I'm going to give it out at 105. Hunter raises his hand. I got another lot here, 110. Alex raises his hand, right? And so it takes the energy of the buyer to raise their hand to say, I want it at that price. To get stocks to go down. Now, it could be news. It could be nefarious. It could be some downgrade. It could be something. But most times, it's the same auctioneer saying, I got XYZ stock at 100, but Danny doesn't raise his hand. And so the auctioneer goes 100, and then he goes 95. No one raises their hand. 90. Nobody raises their hand. oftentimes people forget that this is an auction process. Price is an auction in the marketplace. And so if nobody raises their hand, price goes down. And so the energy you're seeing by the moving average crosses to the downside is just a lack of hand raising typically, especially on something so powerful like an index. Like an index is a conglomerate, right? It's not individualstock.com. It's an amalgamation of a bunch of great stocks, some bad ones, and it takes a tremendous amount to get this to happen. For nobody to raise their hands on the hourly chart and go, I'm gonna let the energy come down this way. It gets my attention. Does that make sense the way I phrased it, Dan?
Yeah.
Okay, super.
Supply and demand.
Supply and demand. Thank you. Probably could have saved 5 minutes there and just said supply and demand.
There you go.
But that's what makes the show
minutes.
because see, Don is the tidy whities of our group. Don wants was that Hunter? Don I can't see the fellas. So Don wants
Don.
Don wants his white t-shirt tucked into his BVDs, and he just wants it. He just wants the information. I want my underwear to underwear. I don't need anything flamboyant. I don't need a Brazilian. I don't need a Nuggers. I just need underwear.
And my blue glasses.
I grew up with tidy whities, but I have switched to Pair of Thieves, which are the best underwear on the planet.
Hold on. I can't see Don, and I'm going to tell you that he's wearing the ones that are sold online, and they feel like your second skin. Give me the first letter of the name, Don. They're a startup.
No, those are Tommy Johns.
Tommy Johns. You're not wearing Tommy Johns?
Those are overpriced. Pair of Thieves.
What do you got on?
Pair of Thieves.
Pair of Thieves.
I've heard those are good. Actually.
He's got his pair of thieves and his blue glasses. Purple blue glasses. Those are stock glasses.
They're the Cremo of underwear.
Oh.
Well,
this show was
Cremo, is that what you said?
This show was taking
Cremo is the best shaving cream on the planet.
Oh, Cremo, not Primo.
The Pair of
Cremo.
Thieves of shaving cream.
No, right. Cremo is good stuff. Cremo comes in a tube that it's like a little tube. I got the peppermint at home. It's good stuff. Not bad at all. So really good show so far. We should just end it, right?
Right.
Yeah, we got
good.
Well, we were talking about rising prices and inflation.
My
question is
underwear
and Cremo going up too.
Yeah, right. I had the picture flash in my brain of Don as an underwear model in the JCPenney catalog. You know, like how they would just stand.
Nobody wants to see that.
Yeah, everyone, paint your mind with that picture. So anyway, Don just wants the information, but Stock Nerds like a little teasing out of what's the thought process. So anyway, so now that you can see the picture of the 1 hour chart on your screen, what I then do is I want to know what can I expect in terms of price retracement and price failure. So, and I do this automatically. You can do it for any time frame. You have to do what works for you, Stock Nerds. So what I'm describing might not work for you. It might not work for your brain. And that's cool. Like that's the whole beauty of trading. Like it just has to work for you. But so what I do is I take my retracement tool, my fib retracement tool, and I'm looking at recent high to recent low. And well, what's recent high? Well, the market kind of broke trend on Thursday. So here's Thursday at the bottom of my chart. I could have taken this high over here. Sure, I could have. But I wanted to go when the market started to break. Thursday it did around 3 a.m. Central. And so I do recent high to recent low, and I'm looking for this number. I'm looking for the 618. A normal retracement to the upside is a 618. If it extends beyond the 618, the move is probably going to reverse. Like the downward move is probably stopped. There's probably some high ticks involved to the upside. And, like if you're short the market, maybe you want to consider wrapping it up, or taking some off the day, something, right? Just to let you know, hey, we're above the 618 and we're probably heading to a 786. Do you really want to endure that pain? You can, but depending upon your time frame, you might want to just be aware of that information. But we failed right after. So this morning after the open, big ticks, plus 1,700 on the ticks. See if I have the tick picture up. Yeah, I think I can get the tick picture up. So I like a good old-fashioned tick Federowski. So ticks, the ticks this morning, I'm looking for the big open. There was a big open this morning, and I can't see it. There it is. So that is a big open, plus 1,000 on the ticks. This is a minute chart of the ticks. That's the actual buying or selling coming right off the New York Stock Exchange. And when they open up really high, and it works in reverse, when they open up really low, you want to look for signs of exhaustion, meaning the buying, right?
Like reversal, yeah.
Yeah, so like you're like, Tim, I don't know what the hell you're trying to tell me. I'm trying to tell you how to make money right now in these next couple sentences. So you see the high ticks. Now you're looking for are we going to run into the 618? When you see the high ticks come first, then you run into 618. You don't know if it's going to work, but that is a place you can start to nibble, if you were, onto the short side. And why I say that is because that's a great point of failure. Well, Tim, how do you know it's a great point of failure? Because it's like everything in the markets, it's algorithmic driven. Algorithms drive most everything, right? So if somebody says the market's rigged, yeah, it's rigged with a bunch of computers globally that are all programmed by the same metrics, and you can start to figure out these points. Like if I took this retracement off my screen, Dan, why would price stop right there? Like you it would just be a level on my screen. You wouldn't see it. You'd be like, what was so magical about that point in time? As someone comes in through the door. And so,
just interested doctor. They want to
yeah,
something on Alex's end.
That's all right.
Yeah.
So about that. Don't be sorry about it. It makes the show more interesting because it happened right on a pause for effect. It literally happened right in a dramatic pause. Rarely can we time things like this. And
this
so,
segment brought to you by WD-40. When you need the quietest squeeze on your screen door,
it was actually Alex's dog had to go outside. That actually let out.
What's the ticker for WD-40? It's WDC. No, that's Western Digital. What's the ticker?
It's
WDFC.
Something like that, right? Let's take a look at that.
WDFC. Yeah.
Okay, yeah. WDFC. Now I'm curious. This is an hourly chart. Let's get this on a daily. Little WD. Oh, Alex, they need your support. They're gonna need you to go buy some WD-40.
That's an earnings reaction, I think, right there, right?
Yeah, it is. That's a San Diego company.
That's called the Gap and Crap.
A lot of potty talk just filling the airwaves today, Danny. We are absolutely on a roll here. So look, this daily chart of NASDAQ, you can see just below the 8 now. Not really, but. So now what happens is you fail, and now this is the line of battleground for bulls and bears. So if bears can drive it below yesterday's low and get it to close below yesterday's low or somewhere near today's lows, that's a win for bears. I would look for further weakening next week, and then that would be a short the rips kind of market. Okay. That means that you're continuously drawing 618, continuously drawing your fib levels, and you can short the rips back to moving averages until the trend is what? Broken. And how would you know it's broken? Well, it starts trading above a 618 in that time frame you're looking at, okay? Or starts trading like say above these moving averages, like fails at the 5, does it fail at the 8, does it fail at the 21? If it keeps doing that, then you're most likely going to go lower. So then it makes me want to extrapolate out further. I want to see a bigger picture. And what could I expect? So let's go back to the daily chart. And so normal for the market to become stiff down this 14,550, 14,560 level. That's the daily mean, okay? So the daily mean is down to 14,000, but I think there's a chance here. I think there's a chance that you come down and test the weekly mean. And so it's I'll give you the whole doesn't matter the reasoning. I think there's an opportunity here to come down and test the weekly. And you've done it twice this year. This would be the third time you get to do it in 2021. And it's a rising 21 weekly mean. So that to me tells me that's probably a really good buy point. Like if you're fortunate enough to get the market to fall to the weekly mean, which is 13, we're going to call it 13.9, sniff of 14,000, okay? That's probably a great buying area. And so, well, where does that line up on a daily chart? Well, let's take a look. Down at the 50-day. And so that's a pretty long way to fall. Is it going to happen during earnings season, which is next? We're really earnings season and earnings starts next week. Exactly. I mean, it's a market. Anything can happen. And which then leads me now, see, Danny, being a graduate student, not just a graduate, a graduate student of the Connecticut School of Broadcasting upstairs. That then leads me to stimulus, right? And so we had some new stimulus start to be sent out yesterday. And I actually want to ask the question, is it new stimulus? So the child tax credits that they're sending out. The first thought I had was, see, they're not even waiting for you to file your taxes to get it, right? They're just going to send it to you.
They're sending it, man.
They're going to send it to you.
Keep the money coming.
And there's a lot of thoughts here around this, what's happening with money. Look, I'm going to say something, and someone at home is going to look at their screen, or if they're listening just audio wise, they're going to give me the old Isaac Dog, huh? Which Isaac Dog used to do to me. Isaac T. Dog, my dog, who would rest in peace, is not with us anymore, but used to look at me all the time like, that don't make sense, dude. Money is such a commodity right now. Like, it's so prevalent. We've printed so much. Rates are so low. Like, before, the child tax credit when did that come into it? I feel like that was the early aughts, right? Like, Bush introduced the child tax credit, no?
I don't know when it started, but it's been around for a while, just in much smaller
and it
proportion.
Was right, and it wasn't
lower income. They've kind of really,
and it wasn't something that you sent out to people like a stimmy, stimmy check. I know this. Yeah, everybody knows this. But now because there's no desire to stimulate it's a hard road to hoe to send out. I guess it would be a fifth stimulus check. I think like a fifth stimulus check because that would shatter the narrative that the economy is growing. They're going to send out in the form of a child tax credit cash right to you. They're going to direct deposit to you. They're going to start sending out debit cards to people who need the debit card function of this. And the note that I wrote down as soon as I heard this, that's how they were going to do it a couple of weeks ago, was, is this stimulus? Is this enough stimulative effect to drive markets higher? Because now you're not sending out this money to everybody. You got to have kids. And not only do you have to have kids, you can't be living in Sad Dad Village by yourself like you're the father. You have to be the custodial parent.
Yes.
So it's
head of household.
Yeah. Head of household, custodial
divorcee
parent.
Or married.
Yeah. There could be a lot. By the way, there could be a lot of Sad Dad Villagers ticked about this. They're expected a child tax credit, and it's going somewhere else. Right. You like Sad Dad Village? Yeah. I've been there. That's how I know. So, Don, was that Don or
no? That was Alex.
Was that Alex? Was that Alex in the Sad Dad Village joke? Nice. So, I don't think this is enough to stimulate the economy, Danny. I don't think it's enough to keep markets aloft. I don't think it's enough to keep meme stocks going, meaning new money. Like, I don't think this money is going to be sent to the markets like money of old was. I don't think this money is going to be sent to the collectibles market, the NFT market, the NBA Top Shot market, whatever it is. I don't think this money, now I can be proven wrong, but I think the shift is on where you've seen the.
You think it's living expenses?
Well, it doesn't matter where the money goes to in that regard. To each their own. I think the money's not coming here. I don't think the money's coming to markets to keep them propped up. And I say that, and I don't mean the words propped up, because there's real companies with real earnings, with real growth, and I'm not talking down the markets. There's just a tremendous amount of supply. And that's the problem. We're going to talk about that in a moment, okay? But first, because I am a graduate student of the Connecticut School of Broadcasting upstairs, what I do think the problem here also is, I think it's interest rates. They're too low. Now, Janet Yellen has said she expects rapid, like imagine a jet on an aircraft carrier hooked up to the machine, the gee whiz bang thing that propels you off the deck. She sees rapid inflation. Jay Powell, we're watching it. I wish Jay Powell and Janet Yellen would talk, okay? Because here's the thing. Let's look at a chart of lumber, friends, because I'm going to show you the discourse in the economy. Look at this chart of lumber. You're going to hear now lumber. Lumber, by the way, Danny, did you know lumber is red on the year?
Is what?
Red. Lumber is in the negative. Lumber is not a positive. It's a negative, Danny. Prices are crashing all over the place. Sunday, come down to the lumber yard. It used to cost you an ass load. Now it just costs you a shit ton. Lumber. That's how you wake them up.
I laughed.
Thanks.
Yeah, quietly, but I laughed.
You're not getting this discount at the freaking Home Depot. You think lumber is marked down at the Home Depot? You think lumber is marked down at the sawmill? You think lumber is marked down at your Lowe's? Think firewood's any cheaper?
No.
It's not. You're not going to see any of this. Why? I have been racking my brain around this. Like, do you know how messed up our markets are right now? Let me show you a chart of old Southwest.
Well, very, very low interest rates drives markets higher, not lower.
You can't get a seat. Like, if Southwest could hang straps from the ceiling, there would be strap, like when you ride a bus or a subway, there'd be strap holders. If they could do it, they would. United Airlines would surely do it. Spirit Airlines, the worst of them all. Spirit, I think, per capita of traveler has more fistfights than any other airline.
I hear United people swing on a bit, but
United, they just come on and carry you off the plane while bumping your head on every armrest.
Yeah.
It is brutal at the airports. I go, look, I don't want to, I just want to get to where I want to be. I want to be happy. If you want to get pissy, go ahead, man. Like, there are a bunch of angry people right now driving on the roads and at airports.
Do you lean your seat back on an airplane?
No, man.
You're in the anti-seat lean back?
No.
Okay.
I just am usually...
you just stay up straight? You don't worry about it?
I actually forgot my seat reclined. I'm not making this up because I was holding a baby.
Yeah.
And so I'm just trying to keep Nora happy,
Well, that's a big job, yeah.
Like, hey, Nora, stop hitting me in the face. Like, literally, I'm 3 feet with whatever's in front of my nose. Nora, that's my world. I forgot my seat reclined. She might have actually enjoyed that. I can't remember the last time I ever reclined a seat on an airplane. But look at the price of Southwest. Look at the price of United. Those are not bullish charts. We've talked about this.
Well, they front run the stories out, and now they're selling them.
It's more than that. It's so much more than that. It's labor.
Oh, yes.
No. It's the market understanding. I'm convinced of this now. It's not that this great expansion. The market is, pay attention, stock nerds. The market is different than the economy. Not groundbreaking.
That's true.
These stocks are being discounted because of all of the incredible costs that come with reopening the economy. And the reason why you're not going to get a discount on the price of lumber at Home Depot is because they've got to pay so much more for the help they have. And it's a really big issue. And it's so big that packed planes that are at pre-pandemic levels of fullness, don't drive these stocks up. My friends, you can't fall into the narrative of it's a reopening economy and you're just going to go out and buy the stocks that are part of the... What's Norwegian Cruise Lines? NCLH? Do I have the right NCLH?
Yeah.
Okay.
They look just like the airlines.
Cruises are booked. They're all booked.
Well, you can't have it both ways. They're talking about growth, but they want to keep the payment checks going. And some people won't if they're getting paid, they're not going to go to
the
work.
Inflation is from labor.
Yes.
The inflation is from labor. And
the money printing.
Yeah. So, we've established that. But the reason why these stocks aren't working is the increased cost of operation. And so the reason why you're not going to get a discount on lumber.
You're saying there's a cost on their margins. Their costs are going up.
The only way. Let's look at Home Depot. I'm not being fair here because that's a good looking chart. Well, it's a good looking chart here in the near term, but look at that sell off. The only way these companies don't fall off an entire cliff. See, because the marketplace, like when Walmart came out a year ago and said we're going to increase the pay
wages
of our frontline workers, we're going to Like for years, Walmart's getting dinged on how they treat their people, right?
Yeah.
And for years, Costco gets rewarded. Like look at the chart. Costco. Look at that chart of Costco. It's beautiful, and they treat their for years. Their model has been built around, it's been priced around treating their workers lovingly. You won't find happier workers but at a Costco. They are treated well. They work hard, but they are treated well, okay? And I'm going to show you now the WMT, the chart of Walmart. And they're like, Tim, that's not so bad. It ain't Costco. That chart is not Costco, my friends. That chart is a chart that represents a company whose model is built around low prices every day, which means low prices on labor every day, which means they weren't built for their cost structure. So Wall Street doesn't give them the benefit of the doubt. The people that matter, mutual funds, pension funds, hedge funds, right? The people that buy in bulk. See that joke there? Buy in bulk. Mm-hmm. See, they buy in bulk, not like you and I, stock nerds and market lovers, individual investors. So they're buying in bulk and they're driving labor higher. This model doesn't work. The only way they're going to keep these companies buoyant, and I don't mean Walmart's going out of business. Don't misinterpret my words. The reason why these stocks aren't just completely falling off a cliff is because they're taking the higher prices, and when they do get a discount on lumber, or they do get a discount on bacon, or they do get a discount on shipping, they're not passing that. They can't. They're not going to pass it on to you. It's going to go right to the cost of operation. And that, my friends, is a huge difference. And so when you're talking business model-wise, and you're saying the words retail, and I'm showing you Costco, right? Costco is a beautiful chart. New high territory. Their model forever in time was built around higher labor costs, giving them beautiful stock options, including them in the success. Memberships, right? Membership, well, that's not apples to apples. They charge a membership. Yeah, they do. And well, Tim, come on, you're not being intellectually honest with us, are you? Look at Amazon. Amazon's in blue sky territory, and they have tremendous costs. They don't treat their workers that poorly, folks. You might see the story there, but there's some pretty generous benefits. And it's ultra competitive. You don't think the worker that can get $10 more at Amazon is going to jump ship from Walmart? You think there's loyalty to Walmart or vice versa? There's loyalty to Amazon or there's loyalty to Home Depot? These people are in a competition. They are in a death knell for labor. So jump industries here. Go to Hershey Park. Went to Hershey Park with the kids, right? Take the family to Hershey Park. And I'm staying in line because there was a rain delay, right? They can't run the rides daily when there's a lightning storm. So I'm like, hey, are you getting any of the bonuses I see advertised around the area? Like, come work at Hershey Park. We'll sign you to a bonus. He goes, no, they have to give it to us in an hourly. He goes, yes, they have to pay us an hourly. Or we just all won't leave and we just reapply and get the bonus. There's such a competition for labor right now that even if Jay Powell is right, it's transitory. Jay Powell is wrong on labor. He is 1,000% wrong on labor. And so, hear me, stock nerds. The economy is reopening, and it's a glorious thing. There's a group out there, I'm convinced, that doesn't want it to reopen.
Oh, yeah.
They want it to, look, I don't want to get political. It shouldn't be a political issue. But I think there's a group of people that just don't want for the economy to get back to normal. And I don't know. I mean, I read like you do, and it just appears that there's a group out there, but I think it's a glorious thing that the economy is reopening. I think it's a glorious thing that small businesses got a fighting chance. 70% of our economy is small business. Don, you own a coffee shop. How hard is it for you to get work?
The competition is ridiculous. You have people no call, no showing all the time, or not even coming in for interviews. It's insane. Restaurant
in the town I live in. And I know this is anecdotal, stock nerds, but there's enough of these anecdotes to make them prevalent for me to mention it to you. Don's in St. Augustine, Florida. Real popular locally owned restaurant in the town I live here in Texas. I had to close for the busiest part of their week, the weekend, Friday, Saturday, and Sunday. They didn't have cooks. Their Facebook message was, we're going to regroup. We'll reopen on Monday. We don't have enough staff. They can't compete with, and you can't blame the servers, right? Like you want to like, well, I'm loyal to, Susie homeowner here or Susie business owner here. when the Chili's is offering you $300 as a server to come wait tables, you're like, what are you gonna do? It's a lot of money. It's so hard right now, and I need you to think about this, Stockners, because we're on the precipice of this. If small business can't find the labor to work and small business can't survive, that is 65 to 70% of this economy. It is a huge deal. This issue here is a huge issue. And someone would say, well, just sell your business. If someone wants to, good luck just selling your business. Good luck. What you value,
they don't assume any risk. That's insane.
What you value that business at is not what someone's probably willing to pay you for. And why would somebody step into a small business right now in this economy? Well, it's reopening, Tim. This economy is reopening. I keep hearing it on the news. Inflation is transitory. Jay Powell has his head so far up his ass that when he yawns, he can see daylight. He needs to understand the labor issue in this country. Get off the inflationary and get to the labor, Jay, because it's the labor that's going to kill small business. It's the labor that's going to take the labor is.
Well, how does he fix labor?
He doesn't.
That's right.
Congress does. He's hoping Congress does. That's right. You're driving the show, Danny. And that's what I like.
You're welcome.
Get it. Honk the horn, Danny. You are in the left-hand seat. You are driving the car. We are not in England. You honk the horn. That's why.
Well, why should anybody get a job though? If you're getting a check,
that's the point.
Every week,
it's Congress. Congress
like
got
the state of New Jersey. My uncle's got a kitchen and bath company, and he's been trying to find employees. But someone in the state of New Jersey in this year can make $48,000 sitting on their couch. So why should that person go back to work?
So until you pay someone 50 or more, even at 50, it's not worth it because you pay whatever.
Right.
So they got to pay 65 for any job, Tim, before they go back to work.
So now here's the thing. Look how I'm threading the needle.
And they're not. They don't want to take it away right before the midterm election. So it's going to go.
I want to pause and pat myself on the back. I am so threading the needle today on greatness. It is amazing. Like today is Zach. Mark this down as the best show we've ever done.
Best show we've ever done.
Thank you. So now
we've had some pretty good ones, but anyway.
So labor costs are not transitory. The market has been set. Do you think Walmart can roll back what they're paying somebody right now? Do you think Amazon can roll back? So September, I keep hearing, hey, when September comes, all this is going to
Do you think this was accidental or intentional? That's the question. Because it's going to hurt small business, and big business is going to be the beneficiary.
Oh yeah, no, there's a nefarious part to this. I'm really threading the needle here, Danny. I keep you on having the best show I've ever had.
Okay.
So only you, Danny, can prevent forest fires. Okay. So
I'm about to let him out.
Because you're a damn genius.
Oh, damn right.
Damn genius.
Damn genius. Damn genius.
So you want me to tell you what can prop up the market? Let me know when you're ready.
Yeah, I'm going to give you a second here. But so this is the thing. When Jay Powell says, I think it's like September comes, we in the fall we're gonna take the can that's been kicked and we've punted it to the fall and all this goes away in the fall.
Rates.
None of these companies, Stockners and market lovers, can roll back their most expensive cost, which is labor. Do you think any company that comes back and says, we were paying you $17 an hour, we're going to $14? This ball has been rolling down the mountain now. And by the way, I'm all for people making more money. Now, this is not, don't misinterpret my words here. There's a reason why, though. There's a group of traders out there frustrated who have bought like DHI. I haven't checked in on DHI. Not a leading chart. LEN. Not a leading chart. But there's a housing shortage. The houses. These stocks should be to the moon. Well, what about General Motors? By the way, General Motors making the Ford Pinto of this century. They've got a car that freaking catches on fire when you plug it in. The General Motors Pinto. How's that for technology? So, why are these companies not leaders right now? It's labor. And none of them can roll it back. And so when Jay Powell tells you, we've seen a dramatic decrease in the price of bacon. We've seen costs come down. Do you know, Senator so-and-so, that lumber is in the red? It's really negative. Yeah, we're doing our jobs. I came out, and then this guy from St. Louis came out, and you know what he said? He said, taper. And the markets just did what we wanted. Except that labor cannot go down because there's this competition in this country for a workforce. And because there's a political aspect to this, and I am acknowledging there's a political aspect to this, meaning as there's no company that's going to come out because they won't take the political risk and they won't lower wages. They'd be foolish to. Does anybody remember what happened to the Republican Party when they just wanted to trim the increase to the school food lunch program in the 90s? I think they lost like 3 elections in a row. The Democrats are really good with messaging. They are like the best at messaging. You need a message? Get Nancy Pelosi on the phone. Like, she is good with messaging. There is no company in today's highly political, sensitive time frame that's going to lower wages. BigBadIndustry.com is not going to lower wages, which means small businesses, the backbone of this country, 70% of the economy, they can't lower wages. This doesn't get fixed in the fall, but you're seeing a discount price on stocks. And by discount, I don't mean they're on sale. I mean that you're seeing the Loves of the world. You're seeing the Fords of the world. You're seeing anywhere where there's required labor that's not worked into their model just coming down. Well, Tim, I look at the chart of Chipotle, you intellectually dishonest ninmite, which is a made-up word.
Yeah, sure is.
Chipotle is the same model as Costco. They pay them.
Did you say Nimite? What'd you say?
Not really sure.
I was going to ask, was that a biblical term? Was that in the Old Testament? I didn't know what that was.
It's in chapter 9 of the Bible, David.
Like
Come on,
Canaanite or Shemite?
Everybody knows. Everybody knows chapter 9 of the Bible. Jeez. Chipotle is the same model as Costco. So the companies that have this built in, okay, they're fine. The companies that have not built their model into treating their employees well, good luck. And so that's why there's this bifurcation, for lack of a better word, of stocks that you think should be doing well, and they're just not. And it's just been rolling from group to group to group. And we it started with we started noting it with housing, then we rolled it to like some retail stocks, and we rolled it to the car stocks the other week, and it's just it finally just dawned on me that it's not inflation, it's labor. And the other part too with interest rates, and Dave's got some really good research on this right now that I want to break to, is that the effect of low interest rates is that I said it towards the beginning of the show that money is highly commoditized right now. And what that means is money is so cheap that you're going to see a group of businesses propped up that maybe
zombies, yeah,
that maybe wouldn't be propped up in normal markets. And then that led Danny. I'll let Danny say this because it's so powerful. Danny, tell me about the junk bond relationship to markets real quick.
Well, so junk bonds are normally speculative. You know, the old adage and the old saying in Wall Street is, what's the difference between a high yield bond and a junk bond? A high yield bond is when the broker's trying to sell it to you to make it sound good. Junk bond is when he's trying to get you to sell it so he can sell you something else and make the commission. But a high yield or junk bond is more speculative than investment grade, so it demands higher yields. You got a little more default risk. You know, it's more speculative. Right. So it's got a higher interest rate. The yields right now on like double B, like on junk bonds, not the very lowest level, but rate isn't even as high as the inflation rate. That means you're not even keeping up with inflation on junk bonds.
Pause. So junk bonds, just real quick, I just want to make sure you understand that. Danny went a little fast. Junk bonds are the riskiest
speculative bonds.
Of the bonds. When you find a junk bond, that is above the rate of inflation, how stable is that house?
Below the. You mean below?
No. Like if you found a junk bond returning,
that is actually paying more than
that's paid more than the rate of inflation.
Higher risk,
how junky is that junk bond?
Yeah,
like we're talking balsa wood stability here. Like that's What else you got, Danny? I know you've got.
Well, so here's the thing. They keep throwing out the word transitory, and Yellen started. I mean, they've all been talking about it. And when is the word transitory going to become transitory? When you're talking about inflation, like you said, the horse is getting out of the barn. Now, here's the problem. We were talking about markets in general. When you take rates to zero or near zero or even negative, which is theoretical, you have a huge misallocation to assets. All types of risky assets become attractive. It doesn't matter how much risk it is, because you've got a negative yield or a zero interest rates. So that's what Bernanke was talking about when he called it the reflation trade, or Yellen, or
Jay Powell.
Powell. So here's the thing. When you take interest rates down to zero and print this much money, and there's a great article on this, you have such a misallocation. So in technical terms, it says if you take the natural rate so low, then you're going to cause investors will borrow heavily, they'll lever up, and they'll buy existing assets, and it will make financial assets skyrocket. It doesn't matter. It'll make all these, but even non-productive assets look attractive when interest rates are low. Here's the funny thing. Bernanke jumped on board with this guy's article. He goes, I agree with you. And I'm thinking, USOB, you're one of the ones that started all this, you and Greenspan. But the bottom line is everything increases in value, not fixed, not bonds, but equity increases in value when you take interest rates below zero or at zero. So you can't even keep up with inflation. So it's all this money printing that has caused this rise in the stock market more than the growth in the economy. So, you always talk about fundamentals that, probably all that stuff. The reason the markets have gone further than what is, quote, in the normal range, and I don't want to get into that too much, but basically is because what else is there to invest? If you do a bond, a 10-year bond or 15-year bond, you're guaranteed a loss because the interest rate in real purchasing power, because the interest rates. Here's the canary in the coal mine, though. Here's another thing. Pension funds are so underfunded now because they have to have a huge chunk by their charter in bonds. They're not making enough money in bonds to pay their pensioners. They can't. And so now, if this new big stimulus package, you've got well over $100 billion just to firm up the pension guarantee. It's like FDIC, but for pensions, to guarantee to backstop these pensions. A lot of this new stimulus money isn't really going to the people. It's not going to business. It's going to the governments and the pension funds to back the big corporations that have pension funds, because small business don't have pensions. Right. They don't have defined benefit plans. It's going to bail out the companies. But I just wanted to give the counter argument that one thing that could buoy the markets is this flood of money and keeping rates extremely low. I agree with you that with the labor shortage, because they're paying people to stay at home, and because labor costs are rising, they're bidding it up. That's going to get a squeeze on companies' cost. So their margins are going to be squeezed. So it makes sense. And you're right that the more labor-intensive industries it's showing up in the charts. It's showing up. So I agree, but a lot of these causes, a lot of this stuff that you're talking about has been caused by fiscal and monetary policy. Right. It's caused by Congress and it's caused by the Fed. And then we want to invite the fox in the hen house to fix the problem. We're expecting the Fed to fix the problem. You need to I know that you're a proponent of not hurting people and not raising interest rates too fast. I got that. Here's the problem. You've got to let rates be more of a free market somewhat to keep them align the economy. The problem is the Fed's done it for so long. Now they're in Hobson's choice. They can't raise rates. Even, look, inflation is heating up fast right now. It increased the fastest since 1983. It was 5.3% year over year and 0.9, almost 1% just month over month. Inflation is going up rapidly. Now, if you got inflation like that, shouldn't the Fed be raising rates? The answer is they can't. because the deficits would skyrocket. The debt, the borrowing cost for the government goes way up. And he's scared about slowing down any kind of real economic growth we have.
It's crazy how low. I got a chart of interest rates on the screen right here. It's crazy how low the 10-year has gone.
Oh, yeah.
Like with the amount of reopening that we're doing, right?
But that's not the free markets. That's the Fed buying bonds. The Fed is printing money and buying bonds and driving rates down. They're buying corporate bonds. That PBHD bailout is going to buy corporate bonds, investment grade bonds. So a lot of these hedge funds are front running the trade. They realize it because they're trying to get a little bit of capital gain, a little spread. So they're buying bonds. So that's why yields are so incredibly low.
When the market was thought to be reopening, look at the early part of this chart. Here's 2021. When the economy is reopening, look at what happens with rates. That's normal. And they got, we got to drive these down. And I thought at first, I wonder if it's just everybody's on the wrong side of the trade, meaning, hey, like the whole ship was betting on rates going to 2,
right, and covering,
yeah, and then they've gotten blown out of this trade. Rates right now, if you don't know how to read this chart, rates right now are at 1.304
for 10 years of risk. 1%, 1.1 for 10 years of risk, and inflation is 3 times that. That's a guaranteed 2% loss year over year if you're going to hold the bonds.
That's what's known as a risk-free rate.
Wow.
Yeah, and so hold on.
Why do you own it? It just incentivizes you to take excessive risk.
Well, that's the whole point of the article. This, by the way, if you want this article, I'll send it to you. It's great. It gets a little technical, but it's a great article. He's saying keeping rates artificially this low misallocates assets, and people start buying all kinds of just anything. But here's the catch. What happens if rates start to rise in earnest and it gets out of the Fed's control? They always say never bet against the Fed, and that's true, and it works, and it works, and it works until it doesn't. They can control short rates. They have a harder time controlling long rates. But if you get a 2% rise, even a 1% rise will cause easily a double-digit fall in all bonds across the board, including treasuries. A 2% decline, you'll see 25% losses.
Look at your, I don't know if you can see this, Danny, but folks at home can. I know the fellas can too. The 30-year bond, which is a 30-year mortgage.
Right.
Look at what the rate is. And look at where you're at on this chart. You're at February of 2020. Like, this is insane. Like, here's the end of 2019. Here's the start of 20. Rates have fallen back to, it's hard to interpret. Like, is this economy are these prices signaling, hey, there really isn't going to be that much growth? Like, this whole reopening is overstated. You could make that argument based on bond prices, couldn't you?
It's either that or the Fed's just buying the bonds.
Yeah,
yes, it's one of the two.
Right. But either way, the group of stocks that should be working,
according to the story, yes,
are. And like the rates this low. And look, the way to prosperity in this country is through ownership. That's the way to prosperity. It isn't buying a car. It's owning a home. It's owning a small business. It's the way to prosperity is owning stocks. The way to prosperity in this country isn't renting. It's owning. And because the things that your home allows you to do is
then renting. You own and then rent.
Is borrowing against it. Or now Alex has uncovered a new way.
You rent your car. You own your car and you rent it.
With Turo. So a car can become a source of ownership for you in terms of how it can make you money. But this is great. They can't find the labor to build the home. They can't find the materials right now to build the home, even though prices have come down. Where you go to buy these goods isn't going to give you that price.
You're definitely having a bottleneck. By the way, on this article I was talking about, he kind of broaches. He said, I don't really want to get too political here. He said, but the narrative is all this equity inequality, or the uber wealthy versus the poor and the equity inequality. He lays a square on the Fed. He said the Fed is the biggest culprit. They are one of the number one cause of creating this problem. It's just a great article.
It'll be interesting to see how this all turns out. Last week's star of the show was Hunter.
Well, let's tee him up.
Yeah, that's what I'm about to do here because I'm
the angelic.
Hunter I mean,
and who? What'd you say, Don?
Saint Hunter.
Oh,
angelic Saint
Hunter.
Oh, angelic Hunter.
Yeah, and by the way, me mommy loved last week's show.
Yeah, she texted me about it, actually.
She just liked the halo. She liked the halo.
I knew she would. I knew she would.
I texted her and I said, Hunter was awesome today. And then Zach, but see, the thing, so the new title cards on our YouTube channel. Alex, tell the folks about our YouTube channel and what we want them to do.
Yeah, visit the YouTube and type in Revere Asset and make sure you like, share, and subscribe our videos.
There you go, Alex.
And look, if everyone who hears the sound of my voice would subscribe to the YouTube channel, and the little bell there alerts you when we go live with something, a new video pops up, Alex's bonus material shows up there, you will see the new title cards. So Zach, who produces the show for us,
yes.
all the new things you see, stock nerds and market lovers, are attributed to Zach's brilliance. That's not me being facetious. Zach's really good at his job, and the production has gone up a gazillion% because of Zach. And so heartfelt thank you for that.
Oh, thanks.
But the title cards are always a surprise. We don't tell Zach what to do. Zach has full reign to create what he wants. And what he took away from last week's show was Hunter with a halo, which was awesome. And so Hunter usually gives you a rundown of what he's researching, and I want to turn to him now to say, Hunter, what are you doing with the markets right now? What are you thinking? I want to know what groups. Hunter, tell me the groups right now that aren't breaking down that are poised for leadership potentially in the next 7 to 10 days.
Well, I mean, for one, this just speaks to the markets getting a little bit defensive recently. I mean, utilities have been strong the last few days here. And I actually was planning on doing this last, but I'll do it now because I think it's interesting. You talked a little bit about the relationship between bond prices and growth stocks not necessarily acting the same way it has been for the better part of this year. But the inverse to that is how banks acted relative to the relationship to bond prices. And so if you pull up TLT for me, if you can, Tim.
Yep.
And in particular, I want to look at 713, which is going to be a day where TLT was down about 1%, but it was a pretty ugly reversal for TLT, all the way back down to the 21 pretty much. And so what that equated to was a pretty strong move in rates, right? And so for the better
rising. Rising.
Yeah, rising rates. And
just pause right there. I'm sorry. It'll get confusing for somebody at home. When bond prices go up, interest rates go lower.
Well, when interest rates go lower, bond prices go up.
You can say it that way too.
Rates drive bond prices. Well, prices don't drive interest rates.
Hold on. We just got an insight into Danny's need to be right. You're right. You're still in the front.
I just want to be accurate.
Honk the horn. You're still in the driver's seat. There you go. All right, Hunter. I'm sorry. I didn't mean to throw you off the train there.
Yeah. So no, that's fine. So pull up KRE or KBE, whichever one, doesn't really matter.
You know what? I think let's do regionals. I've heard a lot of chatter that regionals are where you want to be.
So just look at what they did on 713. They closed at the bottom of the range.
Mm-hmm.
They're down, KRE down 2.2% when you get a strong move in rates. And that is abnormal. Typically, even though banks have started to fall apart, which is because, and really it looks very similar to what TNX looks like, honestly.
Mm-hmm.
But for the most part, when you get a strong move in rates, banks are moving up with that, and growth was typically weaker. Well, that's not what we saw on the 13th. So I noticed, I mentioned that to Don and Alex. I was like, look, this is a little bit of a change in character with banks and how they're responding to the changes in rates here. But what's interesting is there is a subsector within the financial area that is acting very strong. So you pull up BX for me, Tim. It's Blackstone.
Mm-hmm.
And look at this stock compared to banks. I mean, it hasn't even, it's above the 8-day. It's actually making a new high today.
Fintech.
And Alex has been on this stock. BX.
Yeah, no. Fintech has been beautiful.
Yeah, so it's the asset management component of the finance sector is incredibly strong. Pull up TROW, TROW. I mean, look at these charts. They look a hell of a lot better than the banks. And I know that obviously they do different things, right? But it just speaks to, maybe a lot of what we were just talking about with the fact that you've got horrible returns on the risk-free rate or on your fixed income or a money market or a CD. There's absolutely zero incentive to own those types of things right now. Zero. Like, you don't want to be in cash because your purchasing power is going to crap because inflation is incredibly high. You don't want to be in CDs. You don't want to be in treasuries. So it literally, in this environment, it forces people and forces institutions to be in equities, even if they don't really want to be, just to keep up with inflation. It's a very interesting environment.
Look at the
But with that being said,
hold on a second. Look at this. Keep them right here. PY. Sorry, I couldn't think of PayPal. PayPal, Square, Square, the whole lot of anything but banks. Look at Visa, look at MA, look at AXP, just the whole anything but banks, anything but cash. is Hunter's point is so spot on here. Great insight.
Yep, that was really that was something I noticed that was very interesting. We've been following those asset management, investment management types of companies, and relative to the banks, how are they acting? But I do have two individual names that I want to highlight that are very close to all-time highs that are acting well. Will you pull up CVNA, Carvana?
Ooh, this is like the whole Vroom area. These, sorry about that, CVNA. Oh, yes.
So just one that I noticed that ran up to right at all-time highs, pulled back a little bit with the rest of the market and the rest of growth stocks, but one that did not break the 21 as a lot of others did. For example, like Roku or Shopify or even CrowdStrike.
What's Carvana?
KMX, I believe.
Thank you, not CMX. Yeah, I had
also looks good from what I remember. Yeah.
Mm-hmm.
And they actually look very similar, to be honest with you.
Yep.
And I noticed this. There's some strength off the 21 today. It's tried to get above the 8-day exponential, just kind of sitting right on it. But one that never broke the 21 and held up pretty well, and it has showed relative strength today. It hasn't been red at any point today, while most growth stocks have, for the most part, been red at some point today, whether it's PayPal, Roku, Shopify, NVIDIA, whatever you want to look at.
What's lithium motors?
Carvana's lithium motors?
No, lithium. It's not LIT, is it?
Now, can Carvana rent their cars out for the day to Toro while they're waiting to sell them?
No. Gosh, if someone can give me lithium motors, that's out of the Western states. They own a bunch of dealerships. I'm curious about that.
LAD.
Thank you.
That's what it is.
Not as good. Not as good.
Still relatively similar action, though. I mean, there's a lot of stocks that are below the 50, below the 21. So I mean, for what it's worth, it's holding up above. And another off the radar name, and these are names that aren't necessarily your common tech names per se. Veev, VEEV, was able to close above the 21 yesterday, just slightly. Mm-hmm. And although there's extremely light volume today, it is showing some strength, getting back, staying above the 21 and actually sitting right on the 8-day exponential. Very similar to Carvana in that it ran up to right at all-time highs and has pulled back the last few days. So two names that are above the 21 that are very close to all-time highs to keep on your radar, just in the event you can set an alert above the 8-day exponential. You can set an alert at those previous highs. For Veev, that's right around 325. For Carvana, it's actually pretty similar. I think it's like 324, or actually 330 on Carvana is the highs that it got up to most recently. So That's all I got today. It's just those two names as ones that have held up pretty decently, while a lot of others have pulled back more so and sliced through moving averages more so than they have.
All right, Alex, what you got, brother?
The first chart you can pull up is UPS.
Oh, look at that.
What's interesting is that it sliced through that 50-day, but then reclaimed that like 2 days later. If you ever see that, pay attention, because that is showing that institutions that have that in their portfolio are probably defending it or just adding to that position. Um, it looks like a cup base to me, like a mini cup base. So depending on where the market goes from here, um, could dictate that move higher, maybe through that 219 level. Something I want to point out is your odds of a new buy. If you buy something that you don't own yet and you don't have a position in, if the market is extended, which it is, your odds of it working out are slightly lower than if say the NASDAQ or the S&P 500 are bouncing off their 21 EMA or the 50-day. So just keep that in mind for new buys, and always set your stops. So if you do buy UPS here for, say, maybe keep a tighter stop than 5%. So if you buy it around 210, maybe 202 area, which would be roughly a 3 to 4% loss. And then on the upside, like you see above that 3 ATR that Tim has up there, which is through 219, that will go higher as the stock goes up. It's not going to stay there. But if you get to around 10, 15% gain, start taking profits. That's a good trade-off. A 3% loss potential for on the other side, a 15% gain. I'll take any day of the week. The other stock is a slightly thinner name and a different sector is Revolve, RVLV. This is a clothing company. My wife uses their product or their site to buy clothes, and it's a choppy stock. It's not as stable, and so just warrant caution. You could get easily shaken out, so try to pick a good spot. I have not bought it yet. I'm kind of waiting to see if it can consolidate up here near the highs and show tighter action. I'm leaning more towards liquid, tighter trading stocks. Like last week, I recommended that TMO and PKI. Those are working out really well, and sometimes the slower names that are grinding higher overall over the course of a couple of months end up performing better than those fast driving growth stocks that have big ranges. Yeah, but if you're at work and you're not at home like us at the desk and watching screens every minute, you want to maybe get into a name that's a little bit more stable and slower average true range on its daily than, say, a Revolve. So just keep that in mind when we're offering these opportunities. You have to measure your risk differently with a UPS compared to a Revolve. So maybe you can go a little heavier in a UPS than you could a Revolve. Those are the two for today. One point I want to make. So Peter Lynch, a famous investor, always said to buy something or invest in companies that you use on a daily basis. Well, I was at the golf course 2 weeks ago, and I wish I brought it up last week, but I was using Venmo to tip the cart guy. He was like helping me clean my clubs and put it in my car. Really nice guy. I didn't have any cash on me. I'm like, hey, do you have Venmo? He's like, yeah. So I pulled up the app and I tipped the guy with Venmo, and I'm like, man, this is like, it's now becoming real. That whole the crypto and fintech, and we're moving away from that cash, actual physical cash type society where it's now all electronic. And PayPal does own Venmo, so PayPal is also on my watch list. That's a great institutional name, solid fundamentals, and we do own that in house. And that's it for me today.
Awesome. Don has the if you don't know Stock Nerds Market Lovers, the 21 over 21 list every Friday night comes out. His Dirty 30 gets updated as well, and that's also Friday night. So Don, you got the video tonight, takes people into the weekend. What do you have?
About turn over about 5 stocks that are coming off the list and being replaced with new ones. One thing I really noticed this week is a lot of strength and money flowing into staples, real estate, and utilities. and I always say all rotation takes place within the S&P 500. The S&P 500 has been relatively stable while we've seen some sectors really improve and other sectors get worse. Namely, basic materials and energy continue to deteriorate. Technology had been extended for a while. We're finally seeing a little bit of a pullback in the bigger cap tech names. And always keep an eye on the growth proxies and the ETFs that we use for growth proxies. ARKK, that's the Cathie Wood ARK ETF. QQQJ, which is a mid-cap sort of NASDAQ 100. FFTY, which is the IBD 50.
Can you pause there for
and
1 second?
IWO, which
sorry.
is
Go ahead, IWO. Sorry, go ahead.
IWO, which is small cap growth. If those are outperforming, then growth stocks should be doing okay. Now you're seeing all of these being down closer to the bottom of their ATR, and that's consistent with what we've seen over the last week and a half as these types of stocks have underperformed.
Let me show you something, Don. I didn't do this drill that you did. I haven't ever done this drill. I'm going to. I just picked up on something, Don. Run through your ETF list again. Just the first
ARKK.
one you mentioned. So here's ARKK, and nothing in my world escapes the laws of probabilities. And so you get beyond the 2 to 3 ATR, you're looking for a pullback. 3 ATR, you're looking for a pullback. 3 ATR, it doesn't matter. They're rising up. It's not a bearish.
Maximize that.
Zoom
that
in on
chart.
the chart, Zach.
I got it.
Oh, okay. Zach's got it.
There you go.
Okay, so 3 ATR pullback, 3 ATR pullback, 3 ATR. It's not. It doesn't have to be nefarious. It's just what happens. It's probabilities. And if you're not new, if you're newer to the work, it's just that 3 ATR is 3 average true ranges above the mean, above the 21 exponential moving average. It's to give you a visualization of the word extended. Alex used the word extended. Don used the word extended. It's to show you what extended looks like. Look at this arc. 3 ATR pullback, right? What was the next ETF you had?
QQQJ.
QQQJ.
Thank you. QQQJ. It's the same thing. You get to, this is what struck me, Don, 3 ATR and pullback. And then the next one you went to was FFTY. And it's the IBD 50. But they use, the way it's formulated isn't all 50 stocks. It's a weighting of, I believe, like the top 10 or something. I got to go back and look. But this never even got to the 3 ATR. Like, look at this. This is fascinating to me. I would have never picked this up if Don didn't mention it. Dak, here,
That's bad.
And that's because they rotate in cyclical stocks. When those are more in favor, they don't stick with the traditional factor of growth. So you'll see,
and that's farmed out.
And they get caught in the rotation very often.
That's licensed out.
Just as money's coming out of them.
Yeah, FFTY is not like
it's not by IBD itself.
No, it's Innovator.
It's licensed out to
Innovator Funds. Is one.
Innovator,
yeah. So Innovator does the ETF for IBD. That's who they sold the license to. Their formulation is different, but if you look at ARK, you look at QQQJ. I would. I don't want to. The word assume is so tough. I would assume though QQQJ is cheaper than ARKK and cheaper than FFTY in terms of expense ratio. Just a thought. Oh, that is.
I have a question. So the 50, that IBD Innovator ETF, are they tracking the IBD 50 on a weekly basis, like when the paper comes out and they're buying those stocks?
No, there's a rotation. You got to go look at the prospectus on Innovator for the FFTY.
And that's what I was saying. It's not a pure. It's not pure.
The way it's done isn't.
Yeah.
So it's not really following the rules. It's not IBD 50 at all, in a sense.
I want to be real careful here
because it's very similar. It's similar. But it's not.
I want to be really careful here. I don't want to be. I don't want to come off as accusatory, and I certainly don't want to misspeak. So I just know it's different.
Yeah. Go to innovatoretfs.com. Anybody that wants to dig a little deeper into this, go to innovatoretfs.com.
All right, Danny. I thought that was super interesting. Don, was that all you had, sir?
Yes, sir.
All right. Danny, I want to do the normal close, but hold on. I've got one more thing. Super important.
You better hurry, man. We're running over. Zach, come on, Tim. Come on, Tim.
Zach's giving me the ability to run over
you're fine.
by 7 minutes.
You've been giving me the stink eye.
That's a lot to be said for that.
I've got two eyes. Yeah, look both ways.
All right, let's Let's do it here, Danny. Give them the how they can get a hold of us.
Folks, listen, if you like what you heard, please tell a friend, tell a neighbor, just send them to revereasset.com. We won't spam them, email them, or reach out to them anyway. It's up to them to reach out to us if they want a complimentary portfolio review or they just want to talk or ask questions. We've got all kinds of free research, including this podcast and our daily market insights video. There's also a webinar sign up that you can sign up for Don's Lunch and Learn. It happens about once every quarter. That's an hour long at Wednesdays at noon. And by the way, pretty soon we're going to have a big website update revamp that's going to be very, very cool. And it's going to streamline everything and make it a lot easier and more user-friendly. So if you got any questions, you can email any of us, Dan at revereasset.com, Tim at Revere Asset, Don at Revere Asset, Hunter, or Alex at Revere Asset. And you can always call us old school at 855 Real Wealth.
Okay, two last things, and then we will bring this week's show to a close. One, what you get by coming on board at Revere is immense, and it happened 2 weeks ago, and we've been talking about it on the morning call. When you have a major life change as a client of Revere, we are right there with you. Whether it's a wedding, whether it's a loved one passing away, we are absolutely, whatever stage happens to you or is about to occur, we are right there with you. The services that you get for being a member of Revere, we don't sell anything. Like, it's all encompassing. You get strategy. You're never going to be sold insurance. You'll be told the truth about insurance. It's insurance, not an investment. You'll never get sold an annuity. But the guidance that you get is invaluable because you think you can just go to the website. I mean, go to the internet and go to Google and like, you have a death in the family. What should I do? And what you're going to get, Google's going to feed you everything. And it's overwhelming. And it's absolutely the least helpful thing you can do. And I can't begin to tell you how, when you're put in that position of losing someone and you're trying to figure out what to do, you haven't done the research before because it's, let's face it, we're humans and it's morbid. And we don't go to morbidity. We are optimists generally as humans. And so to have someone standing with you shoulder to shoulder, no matter where you are in the country, to give you what you need and how to proceed, and to join the calls with you and to be there to make sure that nothing falls through the cracks. That service and alone is just immense. And you can't do it on the internet. There's just too many opinions. You're going to get fed opinion and not fact. And I can't begin to tell you.
And paid ads.
Yeah, and paid ads. And I can't begin to tell you how grateful the clients are at Revere for that. And it's happened recently that it's stuck in my brain that we provide a service at Revere that is like none other in this country in terms of not wanting to take, we just want to help. Whether you're a client or not, we're here to empower you to be the best version of you as an investor and a consumer. And I can't begin to tell you how important that was for a couple of stock nerds and market lovers this week or the last couple of weeks. So if you've ever had a question, never be afraid to call 855-732-5932. Now listen to me. IPO Club is struck again. Okay, IPO Club is growing. About 4 weeks. June 12th, Daniel. It was the June 12th podcast. You went away. We had the best. This is now the best show in the history of shows, right? But June 12th,
I was here.
June 12th, I called Hunter, excuse me. And where is the June 12th? There it is. What if we bought every IPO in SPAC? I'm pretty sure that was the call to Hunter. And it was a 20-minute call, maybe not even that. And that's not even like, we were just trying to figure something out because I had something crawl in my brain. And then let's just buy them all. And then that spawned IPO Club, which meets on Twitter if you want that ad. Just email me, tim@revereasset.com, or find me on Twitter at TJReazor. And then you can get let into the club. It's free. A bunch of stock nerds and market lovers just like you. But the stock nerds and market lovers that are part of IPO Club discovered something really interesting, along with the growth stock breakdown that the fellas have highlighted and talked about the show. IPO Club sends out an IPO Club alert. They sent out an IPO Club alert earlier this week, and all the IPOs started breaking, like a majority of the IPOs started breaking down, and which got me thinking about there's too much merchandise, right? So let me tell you something right now. IPO Club. There's 20 in 2020. 262. 262 in 2021 IPOs to include SPACs. Only 15.3% of those are above the 21 exponential moving average. That is not a lot, friends. 2020, there were 212 IPOs and SPACs. Only 10.7% of those are above their 21 exponential moving average, which but when you see this, like when Don and Hunter and Alex see the breaking down of leading growth stocks below their 21, that gets their defenses up, that gets their antenna up. Because, hey, that's a shift in trend for the markets. We need to pay attention to this. We need to be defensive. We need to wrap up profits. We need to limit our buying, whatever you want to do. Same thing with IPO Club. IPO Club sees this. This is what's been leading the market off times. It's these newer issues. They're not working. And they haven't been working for like 7 to 10 trading days. And so, which got me thinking, hey, there's too much merchandise, right? And so you think about recent IPOs. Like when you look at this company Lovesac, right? LOVE. Not to be confused with Southwest Airlines. Lovesac has a small float, right? When I talk about too much merchandise, their float's 15.1 million shares. Lovesac breaking down. And compare that when I say merchandise, like a company like Restoration Hardware, right? Only has Restoration Hardware holding up above the 50, 21.3 million. But listen to some of these IPOs. Mark Wahlberg, Marky Mark, Dan, come on, I see you dancing. Marky Mark. FXLV, which is F45 training, right? I believe Alex is in shape. Alex looks like he works out. Alex, you work out?
I can't hear him, but he said yes.
He said yes.
Yeah. Hold up.
Can you hear me now?
I can hear you now. FXLV, right?
That assumes that you think everyone else does not look like they work out, including myself. And that hurts my feelings. So
Hunter, when is the last time?
Okay, don't take a left turn here.
When is the last time
we got to wrap up the show?
Yesterday.
Oh.
Good for him.
Do I need to be shirtless on the podcast?
Yes.
Yes. That is what the moment he does it. Can you lift up your shirt now? We'll take the screenshot.
Cutoffs and flip flops. This is the last
me and Alex will have a bodybuilding competition one day on the podcast. We've compared.
I've got the picture. It's Don with his tidy whities and his shirt.
Oh, don't make me flex and knock you over.
Okay, so FXLV has listen to this float. Like Restoration Hardware, high quality stock, Restoration Hardware, 21 million shares. They brought out FXLV, right? Marky Mark's F45 gyms. They brought that out yesterday with 90 million shares, Danny. 90 million shares into this gym that tries to get every franchisee to just have 167 members. Airbnb came public this year or last year, 617 million shares. Donut! Krispy Kreme, right? Came public a couple weeks ago with 163 million shares.
Krispy Kreme?
Krispy Kreme.
They went public.
Danny, their cycle is public-private, public-private, when people need the money. RVLV, Alex just talked about it, came public last year, 72 million shares. Danny, these companies aren't, when they're coming public, they're not growth stage. They're coming public with a lot of merchandise, with a lot of shares.
The private equity guys are selling it to you to cash out.
Not, by the way, that's the way. Google would not be Google without.
I get it.
But
that's why you can't buy them all. You got to be very, very selective and only buy a couple.
But I think it's lower floats is what you like. You're coming public like this FXLV. You're coming public at 90 million shares.
You're saying the key is to find the lower float.
I think lower floats is a part of it. I think that there's too much merchandise. Like look at the chart of RE. Restoration Hardware is like leading consumer, higher end, filling the homes of America.
There could be another reasoning behind that.
What?
If there's a lower float, that means more of the private equity guys like the deal and they want to stay in it.
Restoration Hardware's been public since the 90s.
Huh?
Restoration Hardware has been public since the 90s.
No, I'm talking about
Lovesac?
I'm talking about your theory about the lower float. It makes it bullish.
Well, I just don't think, it's not diluted. Like when I say your theory is that they like it more, and I'm saying that it's not. The shares aren't diluted. The more shares you issue, the more dilution there is.
Yes.
And so I don't know how many rounds of funding Lovesac had before it became public.
Well, the more money it takes to support the stock.
I know Airbnb and DoorDash had like Series D, Series E rounds of funding, and there's so much merchandise. And if you want to know how you can do this at home, like you can join IPO Club. Just if you email me, I'll introduce you to the folks at our IPO Club. You can go to FinViz. It's on your screen right here, right? So you can just do this little drill. 20-day simple moving average does the deal for you. Pick your exchange, New York Stock Exchange. There are 1,430 stocks on the New York Stock Exchange that are above their 21. The NYSE has a total of 2,300 stocks. But you can change it to, say, the NASDAQ. The NASDAQ, I think this, did the NASDAQ switch? There we go. NASDAQ switched. The NASDAQ composite, not the NDX. NDX is NASDAQ 100. The NASDAQ composite is 3,300 stocks, 3,300 stocks that make up the composite. Only in the NASDAQ. Only. Oh, really add 1,021. So 1,021 stocks are above their 20-day simple moving average. More than half of the NASDAQ is below. That means it's falling off. And that is a problem for growth. Like, you need to see more stocks. So there is a ton of research you can do to figure this out. If you want to see IPO Scoop, right here, this is where this website is where a bunch of the research gets done by IPO Club. And then real quickly, going to the growth component of this. Chipotle, one of my favorite stocks in the whole wide world. I love Chipotle, CMG. When they came public, they had fewer than 500 restaurants. That's you want to participate. That's why I like SPACs, even though SPACs are kind of out of favor right now. The problem with SPACs is, Hunter, I've got a research piece with you I'm going to share with you when we're done with this. There are SPACs right now that are so mismatched, meaning that they were supposed there's a Canadian cannabis focused SPAC that merged with that couldn't find a target, and because it's so hyper competitive out there. I'm tying the show together, Danny.
There's too many.
Little bow to tie it together. There's a labor shortage, right? SPAC. There's too many SPACs, and there's not enough companies to find to merge with. You've got marijuana focused SPACs merging with space focused tourism. It's not. There's such misalignment right now. You're not participating when a Chipotle comes public with fewer than 500 restaurants. When a Restoration Hardware has only 21 million shares in the float, and look at the share price.
Got to figure out how to weed them out and pick the best.
And this FXLV comes public with 90 million shares. It's got to. Who the hell's buying 90 million shares of Marky Mark?
I got an interesting stat for you,
Not
Tim,
me.
on SPACs.
Oh, we got to keep going, guys. Keep it going. This should be the next segment.
This is about SPACs.
This
is just a one quick thing.
Quick
thing. Since the first SPAC ETF was launched pretty much at the beginning of last October, its ticker symbol SPAK, it is now down 10%. The S&P is up 30%.
Yep.
However, in the peak of it at the middle of February, that SPAC ETF was up over 33%, while the S&P was up 15%, and it's gone from being up 33 to being down 10 since its inception at this point. So massive divergence and out of favor for the SPACs.
It's the lumber.
And most investors aren't going to sit through that. They'll scare them out anyway.
And with that,
we'll talk to you next week on Your Money.